that with the macro times, or you compare that with an MMSM, it becomes super strong. But if you pair it with time even further, I would like to see what happens. So I would assume that this low here, unless we did return to premium. So we returned to premium, swept out internal range buy stops, possibly see a fractal market maker sell model into here as we reach into 15912 and into a premium PD array. Starting to disrespect that bullish order block I wanted to see, right? So we have old selling in here. Don't see candle body put above that, so this order block in here shouldn't be tapped. Filling the inversion sibi. Expecting another retracement within this range. So here's 1030, and there's the retracement. So watch how we want to use this order block potentially. If we have internal range liquidity and a general framework where we're looking for external range, price does return from internal range liquidity to external range liquidity and the flip side. So if we have a PD array that's been left untapped, we have buy side liquidity to start the sell program, you won't just see the original consolidation met, you'll see external range expansion. So if there's some sort of external range target on the higher time frames, so 15-minute chart, hourly, something like that, a lot of times you won't just see it sweep this out. Obviously, it's a good example here where the liquidity is so close where we're not just going to see this low pierced and then return all the way back up. But if that low is further, like if we're looking at this gap, we would still expect it to expand past this internal range and go for our external range. So tapping into this order block here, let's see how it holds. So the only thing I'm going to be looking for in this 1030 window would be shorts or the IPG. There's probably a gap on the 3. Nope, 2 minute. There's a tiny gap right there. So starting to trade up. If we close above that 2 minute, then I would not be interested at all. So watch this gap here. So look at this. We traded into this 2 minute gap, starting to trade back lower. So watch how I use this up closing candle in here. So this candle, right, we dropped on the lower time frames, so that's a good respect. So I feel comfortable taking a short there, put stop with the high. So you can see we respected that order block, right? Close below it. Like to see expansion. We don't have any inefficiency besides this one that was wicked through. Could start to clear this up actually. This was efficiently delivered. So if you want to be aggressive, you can put the take profit down here at 15912 or just the 40 points. I'll put it down here, but if you look at the 20 points, this would be your 20, and basically about to get that already. Looking for external range expansion, so I'm looking for that low. But there's a 20 already, right? Within 2 candles of entry. Now no inefficiency in here. May want to return possibly up to this short-term lowish. But I'm really expecting this AM low to be pierced in the 15912. I'll just move stop to break even. So we could take another partial off at AM low. And nice expansion through that. No inefficiencies, right? Yeah, 1030 sweet spot delivers once again. So that's why time is important, right? Got 2 different entries in here that was kind of rough, but applying time, got the retracement to the 2 minute. Only looking for shorts, right? Didn't I say only looking for shorts? If you closed above this 2 minute, wasn't interested at all. And there's your expansion lower. Just gonna move this a little bit further in. And should hopefully pierce it with this candle. And if you're really aggressive with your take profit, you could put it all the way down at that gap. I'm just waiting for this low. And there's your low. So nice, what, like 35 points? So 35 points, yeah, pretty solid stuff, right? Pairing that framework with time, expecting that internal range retracement into a parent dealing range premium, sweeping out buy side. Now this framework in itself, this is one of my favorite ones to trade. I think you've probably seen a couple of videos on this, or at least previous examples where we have a large range, we fill the sweep out liquidity, return into premium, and then we try trading back lower. Now this return back up into here, you see that fractal market maker sell model form almost 90% of the time. Can you explain why we entered that short? Yeah, I can try and explain the entire thing. So short version would be in a market maker sell model, or in a market maker buy model. When you have that quote unquote take profit, your low hanging fruit objectives, a lot of times you see retracements back into premium of short-term dealing ranges or even parent dealing ranges. So something like this. I'll try and draw it out quickly. By the way, watch this gap down here. So original consolidation, and we have a low, another low, and we have this harmony reversal, the breaker formation, something like that. Okay. Whenever we have the sell side as target, so this is your sell side you're looking for. If you have gaps that were inefficiently delivered, so no wicks or candle buys through the gaps, or if we have lows, swing lows that are formed within discount, right? So if you take your fib, drop it from high to low here. Any low that's within discount, you're looking for a kind of sweep of it and then like kind of a rejection off into a short-term premium. So this low here, we pierced it, and then you would like to see either this dealing range here from high to low, we see a retracement into premium like this, or if you're really looking for a deep retracement, then you could use this high to low, okay? And you see sometimes a retracement into here, maybe a fair value up is left at the top, and then we trade back lower. Now this framework is the same exact thing. In these retracement legs, in here, you see fractal market maker submodels form in each of these legs, okay? Now this is the same exact framework we just used in this model, okay? We have a short-term low, let me go to the 15, you can see it. Short-term low, right? We swept that out. Another short-term low in the target. We also have this gap. Swept out the short-term low, right here, which is this line. And we return, not into this dealing range premium, because this would be kind of a short retracement. We have gaps up here that were inefficiently delivered, like I said over here, right? So if we take the full high to low, return into premium, right? So return into premium, tapping into an inefficiently delivered area of price, this tiny fair value gap here. We left this open as a breakaway. Return into here, and then we see a change in state, meaning we have an order block here. We'd like to see it used as respect, bullishly, right? Your last down closing candle. You see this gap as well. First indication, we trade through that gap. Second indication, we're tapping into this sibi and respecting it. Third indication would be we're closing through that bullish order block. So this becomes your old selling, right? You don't see a candle body return into the old selling like we want to see it used, right? We close below, no candle body returning ever above that old selling. So once these guys are in profit, we don't see it. Here's another area of old selling. We see speed through there. And then framework would be, we're just looking for some sort of bearish PD array, which would be the 2-minute gap in this case. Here's another a great example, right? We have this high to low. Let me remove all this stuff really quickly. Look at this fractal micromaker symbol as another kind of just a tiny one of this one that we saw. Premium to discount. Where's your PD array in here that we see that was inefficiently delivered? We have one right here, obviously, and another one right here. But more importantly, this one is the order block, closest to the order block, right? So if you have a large gap and you're wondering how far do we return into that gap, if there's an order block close to it, typically you see a full a wick into that order block, and then we maybe reject off of it. But anyways, this is the gap that I'd be looking for inefficient delivery, for efficient delivery of price. We see that low-hanging fruit objective within discount of the dealing range. What do we want to see? A return back into premium. If you take your high to low here, right into premium, into a 2-minute fair value gap, and then that's where I shorted there. Okay, well, it's low. I just want to see we close through this, and we didn't see it close through there. So that's another bullish indication, bearish indication, sorry. 1-minute order block, but that right here should have held, and we had the old selling below here. So it shouldn't put a candle body above that old selling line. And there's your gap built into. Take a screenshot of that.